Sophia Nova here with Nova Brief, and Broadcom just dropped one of the strongest quarters we've seen in semiconductors this year. AVGO shares are moving on numbers that show AI demand is not slowing down. This is not financial advice, but stick around because the guidance for next quarter is even more aggressive, and we will break down exactly what it means for the business. All right, let's talk revenue. Broadcom posted $22.187 billion in net revenue for the second quarter of fiscal 2026, a 48% jump from $15.004 billion a year ago, and also up from the $19.311 billion in the prior quarter. That growth was driven almost entirely by the semiconductor solutions segment, where AI accelerators and networking chips are flying off the shelves. The company called out $10.8 billion in AI semiconductor revenue alone, which is 143% higher than last year and beat their own internal forecast. Infrastructure software added steady but slower growth, bringing the total to a new record. Now on to EPS and profitability. GAAP net income came in at $9.31 billion, nearly doubling from $4.965 billion last year, while non-GAAP net income reached $12.074 billion, up 55%. That translated to GAAP diluted EPS of $1.91 and non-GAAP diluted EPS of $2.44, both well ahead of the prior year figures of $1.03 and $1.58 respectively. Cash from operations hit $10.493 billion, and free cash flow landed at $10.262 billion after just $231 million in capex, showing exceptional conversion. Let's walk through the segments. Semiconductor Solutions revenue jumped 79% to $15.009 billion and now represents 68% of total revenue, up from 56% last year. Infrastructure Software grew a more modest 9% to $7.178 billion and accounts for the remaining 32%. The shift toward semiconductors is clear and reflects the massive ramp in custom AI accelerators and networking silicon that customers are ordering in volume. Margins tell the real story of operating leverage. GAAP gross margin expanded nicely as the mix shifted toward higher-margin AI chips, while non-GAAP gross margin reached 77%. Adjusted EBITDA hit a record $15.244 billion, or 69% of revenue, up 52% year-over-year. Non-GAAP operating margin stayed rock solid even as the company scaled, showing that incremental AI revenue is dropping straight to the bottom line with very little extra cost. Guidance is where things get really interesting. For the third quarter, Broadcom expects revenue of approximately $29.4 billion, an 84% increase from the year-ago period. They are guiding non-GAAP operating income at 67% of revenue and adjusted EBITDA at 68% of revenue. CEO Hock Tan specifically called out AI semiconductor revenue, expected to exceed $16 billion in Q3, more than doubling again year-over-year. That is a massive step up from the $10.8 billion just reported and shows the pipeline remains extremely strong. Now for the valuation check. AVGO trades at a PEG of 1.05, based on a 93 times PE and estimated earnings growth of 259%. Compare that to peers. NVDA at 0.7, AMD at 1.2, QCOM at 1, TXN at 1.4, and INTC at 1.4, giving a peer median of 1.25. AVGO sits comfortably below the median and inside the 1 to 2 fair value band, nudging it into buy territory on a relative growth-adjusted basis. Remember, this is analysis, not financial advice. I'm Sophia Nova with Nova Brief, keeping you ahead of the news.